Hello guys, in this video we are going to see what the latest Bitcoin futures ETF is all about, why this is something different from an actual Bitcoin ETF, and of course the question in everyone's mind, should I invest in it? Okay, let's start. On October 19th, the first Bitcoin futures exchange traded fund was launched at the New York Stock Exchange, spelling out a moment of validation for the budding crypto space. The launch will allow people to gain investment exposure to Bitcoin without actually having to purchase the cryptocurrency. At the time of recording, Bitcoin is trading at its all-time high value of around $66,000. Similar to stock trading, investors can buy and sell shares of the Bitcoin ETF at any time during the market trading hours of the day. The coming of the Bitcoin futures ETF to the New York Stock Exchange has been met with major enthusiasm from crypto enthusiasts. The excitement has furthermore been fueled by the fact that the value of Bitcoin reached a historic price high just one day after this Bitcoin ETF was launched in the US. And that's because an ETF structure opens Bitcoin up to people who have been nervous about buying Bitcoin directly and want to hold it next to their stocks and bonds using similar safeguards to the S&P 500 index funds. After all, it was inevitable that two of the hottest areas of the investment world would meet up sooner or later. For cryptocurrency enthusiasts and investors looking to capitalize on the growing popularity of exchange-traded funds, the possibility of an ETF that tracks Bitcoin is the best opportunity for this type of connection. However, there have been growing pains and problems in trying to launch the first Bitcoin ETFs. The reason is that Bitcoin, the largest cryptocurrency in the world by market capitalization, remains largely unregulated. Additionally, the Securities and Exchange Commission is hesitant to allow an ETF focused on the new and largely untested cryptocurrency market to make its way to the public. Okay then, but if the SEC is so skeptical about crypto ETF, how then it was possible for Proshares fund to start trading last week? Before we look at specifics of the BITO ETF, let's back up a step and go over what a real Bitcoin ETF would be and how it would actually work. An ETF is an investment vehicle that tracks the performance of a particular asset or group of assets. ETFs allow investors to diversify their investments without actually owning the assets themselves. For individuals looking to focus only on gains and losses, ETFs provide a simpler alternative to buying and selling individual assets. And because many traditional ETFs target larger baskets of names with something in common, a focus on sustainability for instance, or stocks representing the video game industry and related businesses, they allow investors to easily diversify their holdings. A Bitcoin ETF is an ETF that mimics the price of the most popular digital currency in the world. This allows investors to buy into the currency without going through the complicated process of trading Bitcoin itself. Moreover, because holders of the ETF won't be directly invested in Bitcoin itself, they will not have to worry about the complex storage and security procedures required of cryptocurrency investors. And you may ask, if a Bitcoin ETF merely mirrors the price of the cryptocurrency itself, why bother with the middleman? Why not just invest in Bitcoin directly? Well, there are several reasons for this. First, as indicated above, investors don't have to bother with the security procedures associated with holding Bitcoin and other cryptocurrencies. Further, there is no need to deal with cryptocurrency exchanges in the process. Investors can just buy and sell the ETF through traditional exchanges and markets. Finally, there is another crucial benefit to focusing on a Bitcoin ETF rather than on Bitcoin itself. Because the ETF is an investment vehicle, investors would be able to short-sell shares of the ETF if they believe the price of Bitcoin will go down in the future. This is not something that can be done with the traditional cryptocurrency market. Perhaps most importantly though, ETFs are much better understood across the investment world than cryptocurrencies, even as digital coins and tokens become increasingly popular. An investor looking to get involved in the digital currency could focus on trading a vehicle they already understand instead of having to learn the ins and outs of something seemingly complicated. Okay, now that we saw what an actual Bitcoin ETF would be, let's have a closer look on the ETF which was introduced last week. On October 19, 2021, trading began on the Proshares Bitcoin Strategy ETF, making it the very first Bitcoin-related ETF. The fund, which trades under the ticker BITO, will track Bitcoin prices through futures contracts traded at the Chicago Mercantile Exchange. While the fund still provides access to the growing asset class and allows investors to short-sell BTC, Proshares ETF is different from some of the proposed Bitcoin ETFs mentioned above. The latest prospectus from Proshares, the company behind it, makes this clear. The performance of Bitcoin futures contracts and therefore the performance of the fund may differ significantly from the performance of Bitcoin, it says. That is because Bitcoin futures are a type of price tracking trading contract entered into by two parties. Both the parties agree to purchase or sell bitcoins at a predefined price at a later date. The final day price of the bitcoin more or less cannot influence this bitcoin futures contract. CME Bitcoin Futures, the futures product that BITO will trade, has strong liquidity and has followed the price gyrations of bitcoin, but it doesn't do so at a perfect one-to-one match. In recent days, the price of CME Bitcoin Futures has exceeded the cash price of Bitcoin on spot exchanges. The annualized premium for futures versus spot has risen to 15 from 7.7%. The ETF will fluctuate with changes in the level of that premium or discount, which could blunt or accentuate the way that the ETF tracks the price of Bitcoin. These products are so new that many analysts who track and compare ETFs are not ready yet to weigh in on which might be the best for investors. But one thing is likely: fees to invest in them are likely to keep falling. Proshares will charge 0.95%, which is better than some other ways of buying Bitcoin for an investment account. GBTC has a 2% fee, for instance. Of course, I would expect that the second product and the third product would be cheaper than the first one because they are largely going to be offering the same exposure to Bitcoin and they are going to have a liquidity disadvantage being available second, but no one can know that for sure. Now, the biggest problem with futures-based funds is that they invest in contracts that expire and then have to buy new contracts to replace them. Depending on the investor expectation and dynamics within the asset market itself, contracts expiring in later months often trade at discounts or premiums to the most recent contract. With Bitcoin, longer dated futures currently trade at a premium, a dynamic known as contango. If current trends hold, Proshares will end up selling lower priced futures contracts at expiration and replacing them with higher priced contracts, selling low and buying high. That roll effect can hurt the performance of an ETF that tracks futures. Gold ETFs, often a cautionary tale, and a particularly fitting one given that the Bitcoin has been likened to digital gold. The SBTR Gold Trust holds gold itself, while the Invesco DB Gold Fund holds gold futures. On a 5-year timeline, the SBTR fund has risen 37%, while the Invesco fund is up 24%. In addition, futures contracts can sometimes trade with high volatility at expiration, as traders holding them may want to get rid of them instead of paying cash for the Bitcoin. Oil futures contracts went negative last year when some traders could not get rid of expiring contracts. The most popular fund tracking those contracts, the US Oil Fund, began investing some of its money in longer dated contracts because of that dynamic. Proshares says in its prospectus that it will be investing in front-month contracts, those with the shortest time to maturity, so it may not be protected from the volatility. Now, what all this actually means is that the returns from funds like BITO, based on Bitcoin futures contracts, can be much different from Bitcoin's spot price, and this is something everyone who is thinking of investing in this kind of ETF should consider. I'm not proposing here that this is either right or wrong, but it is crucial to understand what you're getting into and where you put your money before any investment decision. For now, I will just keep DCA into Bitcoin directly and see how this trend unfolds before I consider putting any money into these kinds of ETFs. I do believe that there is still a lot to come, and I am positive that we are going to see a regular Bitcoin ETF in the near future. Well guys, I hope you found this video interesting. If you want to learn more about Bitcoin, please have a look at this video. Until next time, see ya.